This was the week of the big box retailers as Home Depot, Target, and others announced their quarterly earnings. I just did a post on Walmart, and unlike Target, um, Walmart had risen into earnings, whereas Target has been declining into earnings. Now, if you look at the monthly chart, you can see price is trading roughly $12 above this monthly bias level at 118. You can see that price did find some short-term support at the 125 level based on these wicks, which represents buyers. So you do have buyers defending this 124, 125 level, but the question is, can that be sustained? Before we continue with the analysis, let's look at this article, and it's coming from CNBC. Target slashes full year earnings forecast as retailer struggles to win over thrifty shoppers. So Target on Wednesday missed quarterly sales expectations and slashed its full year forecast as it again had trouble convincing shoppers to buy more than necessities. The big box retailer cut both its full year sales and profits expectations. Target offered a gloomier outlook even as some top economists have scrapped calls for recession and government data shows signs inflation is cooling. Now, the CEO said Target sales and store traffic improved in July, yet he said the company is wary about trends in the second half of the year, including rising interest rates, the return of student loan payments, and still elevated prices of everyday items. He goes on to state, as we look at the consumer landscape today, we recognize the consumer is still challenged by the levels of inflation that they are seeing in food and beverages and household essentials. So that's absorbing a much bigger portion of their budget. Now, Target, which saw enormous sales gains during the COVID pandemic, has tried to bounce back from about a year of disappointing results. Excess inventory and higher levels of markdowns hit profits last year. Its merchandise mix, which includes many fun and impulse-driven items, has become a liability as consumers focus on needs rather than wants and puts discretionary dollars towards vacation and concerts. Now, Target doesn't have the luxury of Walmart, which gets roughly 50% of their revenue from groceries versus 20% that Target gets from groceries. Target's struggles to win over shoppers in the face of inflation have dragged down the company's stock. As of Tuesday's close, its shares have fallen 16% this year, even as the S&P 500 has risen by 15%. Now, they're also dealing with some things that were controversial early this year. Target faced backlash in late May over its collection of merchandise celebrating Pride Month, including some items it later pulled after threats to employees. However, the decision to remove certain items sparked more criticism. All right, so let's get back to the charts. And again, we have this big monthly bias level at 118. We can see for the past 3 months, price has been range bound. This is the May monthly candle. This is probably when all the issues occurred with Pride Month. All right, let's go down to the weekly chart. And you can see how price is just and has been range bound for much of the last 2 months. We've had a fake out so far to the downside. However, price returned to, we'll say, equilibrium. The top of the box, you have an imbalance between buyers and sellers. And at the bottom of the box, you have an imbalance between buyers and sellers as well. So in the middle, you're at equilibrium, and prices are just going to chop up and down. Okay, I'm looking at this monthly buyer's price structure. Not the greatest, but it did rise eventually, taking out the pivot highs to the left that was established in January of 2020. Let's go down to the daily chart. Because of the sideways price action in the last couple of months, price has allowed the moving averages to catch up. So you have several moving averages that have flatlined. You have the 50, the 26, and the 13 simple moving average. And so these moving averages are either serving as resistance or support. So the moving averages right now serve as the line in the sand for price, meaning if prices are below, say, this 132.50 area, price is probably going to go down. If prices are above this 132.50 level, prices are probably going to go up, right? But if they go down and or if they go up, that's where you're going to have the imbalance between buyers and sellers. Just looking at the monthly buyers level on the daily chart, and you had a lot of trading that took place. All right, so what's the trade setup? Let's zoom back out to at least the weekly chart. This is what I'm going to call a bear trap. If you get a sell-off and a definitive closes below the range-bound box, the sellers are going to be met with monthly buyers. So I would anticipate at least a reaction if price was to decline into this zone, and at least a return to the middle of the range bound or the white box. But we'll just have to wait and see how things transpire the rest of this month and then going into September. Thanks for watching. Subscribe. Please like the video.